Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so daily chart, head fake up. We had a move down yesterday, and then we had what you would best describe as a bear market rally into the close. The key part, though, is that the rally thus far has been sold. You've got a Globex low down at 61. Yesterday's low is 59. That coincides with the lower Bollinger Band today. So as you get out on the hourly chart, you see that we did, in Globex, we did 59 even. RTH, we made a higher low, 59 quarter, so basically a double bottom. That has to get taken out today. And in taking that out, you're going to engage the lower band, and you're at least going to put in play the potential for a lower band ride. So look, sell rallies market, this was sloppy, okay? I was sitting on like a 20 handle day, and it turned into a 15 handle day because of this bear market rally, all right? And you know, whether we're in a bear market or not, don't get thrown by the fact that I said bear market rally. You can call it a short covering rally, you can call it whatever you want. You can call it a ramp job in the last hour of the day. That's what makes trading down markets difficult, because if you're early on that, and I was early in that I got short in the area, around 67 in anticipation of resistance at the daily mid-band, and worst case, resistance at weekly pivot, especially after the day that the bears had. I mean, you think about the last 24 hours, if the tide was going to turn, those are areas that needed to hold. It was a great setup. And that's the bottom line. You just, as long as you always take good setups, everything's going to work out. So, you know, instead of being, 12 for 12 to end, to end the last 24 hours, I ended up 12 for 13. But my problem with the whole move was, ultimately, yes, it was sold, but it was really sloppy. It's really sloppy. And that's a double-edged sword for the next one, because on the next one, it's probably going to be sloppy. And because it's sloppy, anybody that's in early is going to have to stay in, because they don't want to miss that boat again when it turns. The real problem is we're talking about the bears, and it may not turn. And if that happens, then you're really going to get a ramper to the upside. So my suggestion is be long the pops, take your profits, confirm short trades with lower highs, keep your stops tight. If that means you have to re-enter, then you have to re-enter. Don't be short and out in the wind. The reason I took the hit yesterday is I didn't want to wake up to a 10 handle gap up. Yeah, we're going to have a 10 handle gap down, but my crystal ball is busted. It's over there in the corner, and I cannot get it to work. So you have to say to yourself, I'm having a gigantic week, or I'm having a gigantic day. I'd like to keep 90% of that, please, and take the hit and move on, rather than hold on and say, I'm not taking a red trade, I'm not taking a red trade. Well, if you're wrong, you're going to take a big old red trade, and all that good work is going to get, it's going to get taken right away. And a lot of traders live their lives like that. Don't be that person. Don't do it. It's not worth it. So today, 59 is everything. Lower level, not lower level, but lower band. Double bottom from yesterday. You've got daily pivot sitting in here around 69. You've got the daily mid band sitting in here at 70, and you got the weekly pivot at 71. So 69 to 71 on the upside. That has to hold today for the bears. Now, they held it once. They need to hold it again, and preferably not go back. Just make a lower high and a lower low, and start doing some stairs down, start engaging the tape, and making the daily chart really look like something that wants to find some more value down below. All right, everybody have a great day. I'll catch you for the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade 'em well.